Britain is heading for the longest recession in history with zero recovery until summer 2024, the Bank of England warned. On Thursday, the Bank of England warned that the United Kingdom will be facing its longest recession since records began. The problem on the UK economy is expected to extend into 2024. The central bank described the outlook for Britain's economy as very challenging, as the unemployment rate may likely double to 6.5% during the country's two-year slump. This video is about England's economy and how the country is on a marathon to hit the longest recession ever recorded in history. Please watch, like, and share this video. Drop your comments and observations below and subscribe to the channel for more videos like this. Let's dive right in. The gloomy forecast from bank officials came as its Monetary Policy Committee (MPC) meeting resulted in a vote of 7-2. The vote was given for an increase in the interest rate from 2.25% to 3% in a bid to curb inflation. The projections after as the BOE raised its benchmark interest rate by a historic 75 basis points Thursday, its largest increase since 1989. With such a rise, the UK GDP has been projected to decline by around 0.75% over the second half of 2022, meaning there will be a squeeze on real incomes from surging energy and tradable goods prices, the bank said. Growth is projected to continue falling throughout 2023 and the first half of 2024 as high energy prices and tighter financial conditions weigh on spending. It's no news as the central bank has stated in an August meeting that the UK was facing its longest recession since the global financial crisis, which will last 5 quarters to the end of 2023. The 8th consecutive rate hike marks the central bank's continued efforts to tame rampant UK inflation, which hit a 40-year high of 10.1% in September and edged costs down toward its 2% target. Governor Andrew Bailey told CNBC that the UK's tight labor market continues to pose a major inflationary pressure. The major reason has been laid on the tightness of the UK labor market. The UK labor force has shrunk since immediately before COVID, so there are risks. Should the economy evolve broadly in line with the latest monetary policy report projections, further increases in bank rate may be required for a sustainable return of inflation to target, albeit to a peak lower than priced into financial markets, the MPC said. The British pound plunged on the announcement to trade around $1.118, while UK government bond yields rose. As of 2:30 p.m. local time, it was trading at $1.1196. And the central bank was forced to intervene in financial markets in September, launching an emergency bond buying operation after the former Prime Minister Liz came with her wrecking policies. With recently installed Prime Minister Rishi Sunak now in office and Finance Minister Jeremy Hunt having walked back most of his predecessors' proposed tax cuts, fiscal and monetary policy no longer seem to be pulling in opposite directions. As such, Bailey said he believes that related market risks have now largely subsided. However, he added that the incident highlighted the need for greater regulatory oversight of the shadow banking industry. We've seen investors move quickly to strongly sell out of the pound in the immediate reaction to the bank's 0.75% interest rate hike, the biggest hike for 33 years. The pound fell around 1% against the US dollar in volatile trade and hit its lowest levels against the euro in a week. That reaction tells you investors are disappointed not necessarily in this hike alone, but the guidance from the central bank that rates won't need to rise much further to contain higher inflation. The market has seen the Bank of England's response to inflation as far too slow and too weak. For this reason, the new guidance is likely to be seen as a return to that interpretation. And the troubling part is, should the BOE be correct and not need to hike rates much further, it's more likely to do with the severity of the recession the UK is currently in. And that's bad news for the pound. According to Chancellor Jeremy Hunt, the most important thing the British government can do right now is to restore stability, sort out our public finances, and get debt falling so that interest rate rises are kept as low as possible. Inflation is the enemy and is weighing heavily on families, pensioners, and businesses across the country. Interest rates are rising across the world as countries manage rising prices, largely driven by the COVID-19 pandemic and Putin's invasion of Ukraine. England's big dive into the recession rescue team is to deliver lower mortgage rates, more jobs, and long-term growth. Unfortunately, there are no other easy options. Please drop your thoughts and observations below. Thanks for watching.